Today's show is brought to you by Vanguard. To all the financial advisors listening, let's talk bonds for a minute.
Capturing value in fixed income is not easy. Bond markets are massive, murky, and let's be real, lots of firms throw a couple of flashy funds your way and call it a day, but not at Vanguard.
At Vanguard, institutional quality isn't a tagline, it's a commitment to your clients. We're talking top-grade products across the board of over 80 funds actively managed by a 200-person global squad of sector specialists, analysts, and traders. These folks live and breathe fixed income, so if you're looking to give your clients consistent results year in and year out, go see the record for yourself at vanguard.com/fixed income.
Institutional quality in this context is meant to convey a level of professional rigor and expertise combined with low costs. To learn more, visit vanguard.com. All investing is subject to risk. Investing in bonds are subject to interest rate, credit, and inflation risk. Copyright 2025, The Vanguard Group, Inc. All rights reserved. Vanguard Marketing Corporation Distributor.
Welcome to Animal Spirits with Michael and Ben. We got an email from somebody who was like, hey, why don't you guys do a little bit of promotion? I know the show is promotion of itself, but let people know what other things you guys have going on. And we've always been of the mind that, yeah, we're pretty loud. People could find us if they want to. But we did something this week that might have flown under the radar because it was a Monday episode, and Monday is not a usual drop for us. Josh and I had the enormous privilege of interviewing Michael Sembalist on Live from the Compound, which you can watch on YouTube. Michael chairs the market and investment strategy group at JP Morgan. He's been there for 35 years, but for 20 years, he's been writing Eye on the Market. And he came on to discuss some of the most important things he's learned since he started writing this. And somebody emailed me and said, like, who are the people that you read immediately, or what sort of stuff do you read? And I said, hey, you know what? That's really interesting. That list has shrank over the years. I'm pretty sure that he is the only person whose posts I never miss. I never miss an Eye on the Markets. And I don't know if there's anybody else that I could say that about.
There are some people that you end up graduating from. No fault of their own. You just you know what they're going to say, or you've heard it before, and he seems to always keep it fresh, and it's not just like here's evergreen wisdom. It's here's what's going on right now and why it's important. And here's some like data that I've fleshed out very deeply in deep research, and here's what it means. Yeah, it's very, very useful.
So what he did with the 20-year retrospective is he didn't just republish it, which I thought he was going to do, which would have been fair enough. He took the charts from the biggest moments of time, the GFC and all that sort of stuff, and like he put modern commentary on what he was saying back then. Absolutely epic. Yeah. So check
great
that
charts
out.
Too. Yeah. All right. He has been talking about, I think he said that the Sembalist said AI is the stock market bet of the century, something like that. What if there is just an AI bubble floor in that everyone is just kind of waiting for it? And that really, I know people talk about retail and all this stuff, saving us from the trade war, and we'll get to the trade war a little bit later, but what if everyone is just, even when there's risks, people just are waiting for the market bubble to happen? So Nick and Jessica at Data Trek did this thing where they compared the NASDAQ to the .com bubble, now versus then. Josh talked to them about this last week. And usually I'm not a fan of these charts, but this is like same scale. And we've looked at this before where like we're tracking, we talked about this last week, we're close to tracking the 80s and 90s. It's not there, but it's there. Like if we had a blow off top for the AI bubble, like we would almost get there. Pretty close, right? Over a 2-decade period. And I just wonder if that's what a lot of investors, if that's could keep a floor under the market. So you and I think both, I think we did this independently. When the market was crashing in April, I think when it was the down 2 back-to-back, like down 5% days, both of those days, I'm like, okay, this is ridiculous. I'm buying NVIDIA. Just because like if AI is a thing, I have to. And it was down 35, 40%. And now it's up, what is it, up 70% from the bottom from us or something?
Yep.
And we both bought it. And I think we both mentioned after the fact, like, this is the first time we bought this stock. And part of me is thinking, like, why would I not just sell this? It's up 70% in 3 months. But the other back of my brain, I'm going, no, wait, there's going to be an AI bubble. There has to. And if there's an AI bubble, this thing's going higher. How dangerous of a line of thought is that?
Well, it's a fair thought, and it's a thought that only happens in bull markets, obviously. I saw somebody tweet this morning that NVIDIA is bigger than, was it Amazon, Tesla, and Apple? Or something crazy.
Probably not Apple, but yeah.
So you're saying that, all right, so a couple things in there. You said a lot. This chart that overlays today with the NASDAQ in the 90s, I think the takeaway is not that anybody expects it to follow this exactly, but bull markets can go a lot longer than you think. Is that the takeaway for you?
Yes.
Okay. So there's been, I mean, obviously a million people who said that we were late cycle, ninth inning in 2018. When did FANG start? Was it 2015 or 2017? The FANG started, like the name FANG, and then it was Fan Mag, and then it was Mag 7. So we've been saying this for years. We've been having this debate for years. Like how much longer this? I mentioned the pie chart last week. The other thing is the floor. So you're saying that there was so much money just waiting to rush in to buy the dip, like happened in April. Is that what you're saying? That it's keeping a floor under these names?
Yeah, or just the behavioral mindset is that we're going to get this blow off top from an AI bubble. Why would I sell now if that's going to happen? I'll sell later when it,
Yeah, I mean that's the thinking, right? That's the psychology, and that's how you feel. That's how I feel. That's how every investor feels who's holding gains.
I just wonder how dangerous of a mindset that is.
So here's the thing: what's going to stop this? These names aren't just going to fizzle out. Okay, you're hearing from every hyperscaler. Google raised our capex guidance from $75 billion to $85 billion. I believe that's per quarter. Is that per quarter? That sounds insane, but maybe it is. Wait, can that be? No. Because their revenue is like 90. Okay, no. Whatever it is, it doesn't matter. The point is, this is not going to stop until we hear from these companies that they're pulling back, that all of the investments are not working as planned. And it's hard to see that happening this quarter or next quarter. It will happen. I would assume that at some point they're going to disappoint, they're going to pull back, and NVIDIA is going to fall 27% in 2 sessions or whatever it is. And when is that going to happen? Yeah. Listen, these are, I'm speaking out both sides of my mouth, but that's sort of the thinking here. We had a emailer ask us, let's see. Do you guys think that there will ever be another time with 0 companies over $1 trillion market cap? Not sure what would cause it, but I would take yes on Kalshi. Would love to hear your thoughts. Will there ever be a time where we don't have any $1 trillion companies?
No.
I don't think so either.
Not at this point. I mean, it would have to be a NASDAQ.com level washout for that to happen. Right? For NVIDIA is over $4 trillion. I mean, I'm not saying it just did fall 65% a few years ago, but
Amazon would be needed to trade at like 1.5 times sales. I don't see it.
Yeah. But your point about the spending, that's the thing that does it in, is all this spending happens and eventually the market goes, wait, where's the return? You guys are promising all this greatness from AI. Are we actually seeing an economic return from it? Yeah. Not just talking and cool things on ChatGPT. Like, are you actually seeing revenues and profits from this?
Now, the other part of it is like, all right, but we know that stocks are a discounting mechanism, and how much good news are they discounting?
Yeah.
I said it's assemblist, but the Chanos quote about in bull markets, people put premiums on promises. How much of a premium is already in NVIDIA? Like what would they need to deliver for this to continue to grow? So I'm thinking about taking profits, or at least half, like 70% since the bottom of April. That's certainly exceeded my expectations. And I don't want to be
carry the 5. What is that annualized?
I don't know. My personality, I'm fine with like selling a little bit early. Like that's just, but everybody's personality is different. Everybody's different.
I was looking through the JP Morgan Guide to the Markets, and they show this thing that shows from the bottom in 2022. And it shows that Europe and Japan are outperforming if you do S&P 500 X NVIDIA, right? And I think we've shown this before, but this just got me thinking. When I was in the institutional crowd, the money managers, when they would underperform, they were great at creating new benchmarks to be like, listen, it's a junk stock rally. Take out all the junk stocks because we're high quality managers. I can't imagine how many managers are doing X Mag 7 or X NVIDIA to show their investors that, listen, it's not as bad as you think. We're underperforming because we don't feel like buying at these nosebleed levels. I just wonder how many money managers have thrown in the towel and gone, fine, we'll market weight it or whatever. Like how many, that mindset has to have taken over professional money managers who fought this for years.
Yeah, I don't envy those people. It's brutal. All right. Spencer Jacob had a post last week about like trying to explain the market and basically like, at a loss for words. Not really exactly sure how to explain the
What was the headline? Why is the stock market up? I don't know. Something like that?
Yeah. So Besant retweeted and said, if Wall Street Journal reporters actually cover the markets, they know why they are up. President Trump's one big beautiful bill prevented the largest tax hike in history and introduced economic drivers like full expensing, no tax on tips and overtime, and tax cuts for seniors. Yeah, that's why the market's up. Tax cuts for seniors. Paired that with our deregulation agenda and the trillions in investments secured by POTUS, and it's more than clear why the markets are responding the way they are. All right, whatever. A politician doing what a politician does. But why are markets? It's so funny how short our memory is. Like there was panic in April, and the V-shaped recovery to new all-time highs that it's been 6 days in a row, and now there's of course pockets of euphoria everywhere. Wild. I was last week having the conversation on
just memory hole everything now.
Like, oh, maybe 4 trillion in Bitcoin in crypto isn't that much. And it's like, whoa. Huh? What?
I saw that. That was a very toppy headline.
It was so toppy. But for people that didn't listen to that, my point was that crypto is not a market cap, right? It's not like there's with a stock, there could be theoretically be a single buyer. And if everybody wants to sell Apple, well, then somebody would take it private because of the cash flows. There's nothing fundamental supporting the floor in Bitcoin. So the market cap, it's made up. It's not real. It's think
about all the market caps for the shit coins out there.
These are not real.
You look at those numbers and
these are not, because you can't take that out of the market. And with a stock, you can. There's shares and there's a price and there is theoretically a willing buyer for the entire business. With some of these coins, what's the air quote market cap on Doge? You kidding me? That's not a market cap. It's not a market cap.
Right.
So that was my point.
Last week we had the question about why can't we just have 15% returns forever? This is a great chart from Goldman. I think Sam Rowe had this on his Substack, and it just shows the S&P price versus trailing 12-month operating earnings going back to 1945. And this is a series that over the long term, it's fundamentals. We follow earnings, which this is like a great reminder. You can see like it opened up at times, and we're opening up a little bit from earnings, but not nearly to like .com levels.
You saw that chart that Matt shared with us on Slack. Earnings are hitting earnings expectations are hitting all-time highs, as is the stock market. This is not magic. We say this at least every other episode.
Yeah. Sam also had a good piece on. It was called. What was this called?
Now, by the way, just let's rewind 5 minutes. Why is the market up? Like, why is it doing what it's doing? Because earnings. That's it. Yeah. It's not complicated. It sounds insane. Given, I was asking Matt, like, could we like volatility or noise adjust the returns this year? I saw Balchunas tweet to Sam like, we're up 9% year to date. If you adjust that for all of the noise in the headlines, we might as well be up 45%. So I had Matt.
The range of the low to the high, that's right. A 30% range.
So we tried to do that, and there's nothing like historical about it, but it feels remarkable.
Wait, I don't get what you're trying to do. Noise adjust.
So I had Matt. What did he do? He like divided the annual return by the max VIX or something like that, or the annual return divided by the number of 2% days, and like when you do it that way, and I'm sure there's better ways to do it, but I didn't want to spend.
This is another one of those for the chart that shows the final return plus the intra-year drawdown, and it's like, wait a minute, this is way.
But it's even more impressive because you have to add like the headlines on top of it, and it was so freaking dark, and the fact that we're up 9% feels like a goddamn miracle.
So I know we've beat this horse to death here, but Sam wrote a great piece, and I think it's important to talk about this because he said that time people freaked out about the CAPE ratio 10 years ago, and
if you were not there. If you're a younger listener, I can't emphasize enough how big of a deal this was.
People were pounding the table. Mostly
John
like
Hussman,
quantitative. Yes, like
John Hussman was a very, very well-respected economist and market prognosticator. He had a very good track record. And so he was getting a lot of airtime, and Henry Blodgett at Business Insider was using these headlines a lot. I remember being on my honeymoon and reading about this, and I was genuinely like, oh shit, like this is not going to be good for us. And it was everything, right? It was headlines.
You show the historical averages, and from current CAPE levels, the returns were awful, right? And so, but the funny thing is that there was people pounding the table on this, and then Sam pulled these quotes from Schiller, and he said this in the 2012 interview. Things can go for 200 years and then change. I even worry about the 10-year PE. Even that relationship could break down. So he was showing some humility in his own work, where other people were pounding the table saying, no. This is the 97th percentile of worst valuations ever.
And it was.
Returns are going to be lower. And think about, and I think it's just important to recognize these things that don't work. So the inverted yield curve, remember that in 2022 it happened? Cam Harvey said, listen, the inverted yield curve since I started this is 8 for 8 for predicting recessions. But even he, I think, said, like, I don't know if it's going to work again. But that's just the track record. Guess what? The inverted yield curve didn't work again. Right? So I just think it's important to like understand how much context matters in these things. That like, and even if something like technically works going forward, it's not going to work every time. There's nothing that works every time. That's the point, right? Even if something like is grounded in like research and evidence and even like economic rationale.
Well, with the stock market, there's no iron law. There just isn't. Well, I guess, well, all right. Off the top of the dome, I would say
I'm trying to think of one.
Well, I could think of one. Volatility mean reverts.
Okay. Yeah, that's
right. Like VIX 50s, VIX 70s, they come down. They can go higher, but they come down. There is some sort of gravitational pull there.
But there's an exception to every rule, right? Every rule, there's an exception to it. The U.S. stock market has always come back. Yeah, what about Japan? What about Russia's stock market? What about all these things?
Yeah.
All right, so I was doing a little updating I've got this thing that I update every once in a while from the Fed that has how much households, the percentage of household net worth by stocks and real estate.
Huh?
And so, okay, I didn't say that well.
No, I know what you're saying.
So the top 10% own 87% of the stock market, right? The bottom 90% own 13%. But in housing, it's different. The top 10% owns more like 44%, and the bottom 90 owns like 56%. So it's for the middle class, the majority, their biggest financial asset and the majority of their wealth is tied up in their house. And I'm kind of worried thinking, well, geez, if the housing market is so bad and so unaffordable for so many people, does this mean that the middle class is going to get screwed big time now? Because they don't own a lot of stocks. And if they're blocked out of the housing market or boxed out, where do they build wealth? Because say what we will about housing as an investment, it's a form of forced saving for people. People who wouldn't have saved otherwise, saved and built equity in their house. And that's like their financial asset. But I looked at this, and the last time I updated this data was Q4 2021. So the latest numbers are Q1 2025. And if you look at this, now it's not a huge change, but the top 1% has gone from 54% to less than 50%.
In stocks. No, that is a huge
stocks.
change. When you think about if you dollar adjust it, that is huge.
The bottom 50% and the bottom 50 to 90 have both gone up by almost 1%. So again, these are on the, but I think this whole idea that more people are invested in the stock market, what if the unaffordable nature of the housing market is going to make people wealthier? Like what if the stock market has to be the savior? So here's an email. Love the show. Long-time listener, wanted to chime in on something from today's episode. This is last week. Ben asked if people are using their down payment cash to invest in the market, and Michael brushed it off. For what it's worth, that is exactly what I'm doing. My wife got pregnant 2 years ago and been sitting on enough cash for a 20% down payment in South Florida. We've been house hunting in Miami and Boca, and nothing makes sense to buy. We can rent an equivalent house or apartment for half the cost of owning, not to mention major repairs. So we decided to continue renting and put 1/3 of the cash to work in the April correction. Would gladly do so again and delay buying another 6 months. I imagine there are many 27 to 35-year-old couples making $200 to $500K a year in high cost of living cities doing the same thing. Duncan told us he's doing the same thing. He slacked me afterwards. So I'm not saying this is like rampant, but what if there's enough young people where like, and the young people obviously are the lower income cohorts, right?
Not these young people.
Well, sorry. Okay. Lower net worth cohorts that usually would have put all this money to work in the housing market are now putting it to work in stocks. And what if that actually makes some of these people wealthier than they would have been otherwise?
Well,
by the nature of getting boxed out. I'm looking for a silver lining here of this terrible housing market.
well, okay, a couple things. Well, these people are getting wealthier because if they've been doing this, the market's been roaring. Obviously, their home wouldn't appreciate at the same extent, and it's liquid, so it's working. The extent to which people are doing this, listen, we got 2 emails like this, and Duncan, right? So it is obviously happening with certain people. Depending on how badly the person wants to buy a house, this is risky as hell, obviously, right? Like the stock market can get cut in half.
But that's interesting that because for some people it's too hard to save a down payment. They go, I'm throwing my hands up. I can't save. I'm just going to do other stuff.
Well, yes. So if you have $30,000 saved, and you're like, I am miles away from having a down payment on a house that I would like, then I could totally understand the psychology of just putting it in the market.
This person has a down payment. They're not. The thing is, in Florida, like I would start dipping a toe in the water and putting some really low ball offers in.
Are you market timing Florida real estate, you son of a bitch?
I'm just saying, buy when there's condos in the street. Like if that's where you want to be, and prices are falling there, and people are having a really hard time selling, lowball some people and see if you can get a really good deal.
By the way, your video was blurry, and now it's come into focus, and that is a great shirt.
Right? Thank you.
That is a great shirt.
You know, we went on a family trip. I got some anecdotes later in the travel section, and my brother-in-law texted everyone before the trip, hey, Hawaiian shirt night, second night for dinner. And then the first night I wore a Hawaiian shirt. And he said, wait, what are you doing? Hawaiian shirt is the second night. And I said, dude, you don't think I have reserves? Come on. Let's be honest here.
Anyway, the housing market is seriously screwing things up.
Yeah, but I'm trying to just put a silver lining on it. But yes, I don't see many silver linings there. All right. So remember how, I don't remember what years we talked about this, probably coming out of 2020 after things really bottomed and took off in early 2021. The prospect for the roaring 20s, right? That was a thing. I think, and I think we had it there for a little until inflation took off. Like we had a mini 12-month period or something where it was glorious and it felt like we had the roaring 20s. And then 9% inflation came in that. But I think what we got is maybe even better. Because if we got the roaring 20s and just rampant inflation, that probably would have just it would have pushed us into a recession if we got too many excesses. But I think we got the resilient 20s. I'm trademarking this. So we got this resilient stock market that always comes back, this resilient economy that throw anything at it. The pandemic, 9% inflation, rates going from 0 to 5%, and then the resilient consumer that just keeps spending regardless of what's happening. So I think this like resilient economy that we got is maybe even better than the roaring economy we were talking about. Like, think about all the crap that's been thrown at people.
I think that's a fair point. I made the case a couple of weeks ago that the tariff war, as far as the market was concerned, was actually a good thing. I think we needed a little bit of cold water because had we not had that, the market could have just gone vertical. Which, whoa, what's wrong with that? Well, a lot's wrong with that. It's stock market's going straight up that's where the danger lurks.
Right. It is kind of interesting to think that, what did you say? We're up 9% year to date now?
Yeah.
So we finish most year, I've said this before, the average up year in the stock market is up like 21%. When stocks are up, the average is up 21%. When they're down, the average is down 13%. If we somehow got another 20% up market this year, that'd be 3 in a row. We're 3/5 of the way to a late 90s boom. When there was 5 years of back-to-back years of 20% gains or more.
It sounds hard to believe.
It does.
Certainly possible.
There's going to be a correction that starts right after this podcast is over because we're sounding very top here. How about this?
Hang on. It's not us. It's the market. What should we be saying?
That's true.
Right? That's like, I don't know. I feel like we're being sort of sober.
Yes. All right. Sony Varghese from Carson Group says the trade war is over. Thank you for attention to this matter. He basically says, listen, the deals are happening so fast now.
You put the thank you for attention to this matter, or did he?
He did.
Okay.
Yeah, not me. He said, the administration wants to close deals sooner rather than later and be done with all the trade chaos. And he says basically, between Japan, China, and the EU, along with Canada and Mexico, that pretty much covers 80 to 85% of US trade. And in my opinion, that means we're done with the trade war. And they're kind of just moving on. Do you remember people who said, like, we need to go through a recession because it's so important? And I feel like that has just been like, never mind. I mean, no, I didn't say that.
Yeah.
That was, we just
No,
like,
I don't want a recession. I know it hurts people, but we need one. The system needs one. Get lost with that.
Yeah. All right. I'm of the opinion that AI is going to be a scapegoat.
If we don't take our medicine now,
yeah,
we'll have to take it later.
Listen, it's Main Street's turn, okay? It's Main Street's turn.
Yeah, thank you for your service, wise one.
Meanwhile, the stock market's up 30% from the lows. So something we've been talking about, the college grad thing. By
the way, even the administration, like even Besant was saying, like, listen, things are very bad. We need a reset. We need to, it's going to be painful. The transition's not going to be easy.
We need a recession for lower interest rates. Employ America says, don't blame AI for the rise in recent graduate unemployment. And they go through this whole thing where they break it down a million charts, and it's really good. Just saying this trend has been in place way before AI. And they even look at like sectors that are impacted by AI and how they are not being impacted in the way that you would assume. So they break this down data-wise. And I just think they don't see the evidence of that, like AI meaningfully hurting recent college grads. And I think AI is going to be the scapegoat for a lot of things in the years ahead. It's going to be like excuses for companies to lay people off. There's going to be people that are having a bad situation economically and looking for someone to blame, and it's going to be AI. AI is going to be, even if AI has all these impacts in certain ways, it's going to be the scapegoat for certain people.
I think that you're right. It will be the scapegoat for a lot of issues, but I don't think that you could quantitatively hand the weight of it away.
Yes.
Like it is making an impact, even if it's not the only thing that matters.
Yeah, but I think the bigger impact is coming, and it's not here yet. This is interesting. So speaking of the college stuff, Adam Ozimek on Twitter says around 60 people in their 30s do not have a college degree, and the college wage premium remains near historic high. That number to me is just the 60% of people in their 30s don't have a college degree. It's hard to wrap your head around the fact that thinking it's that high.
Wow.
Right? It's one of those inverted equations where you go, oh my gosh, that's...
Well, get out of your Midwestern elite bubble, Ben, and you meet some real Americans.
I guess. So Charter had this chart this week that people were sharing on social media. And I know that you're not a big demographic guy, so if you want to tune me out like you usually do, go ahead. But they showed that the fertility rate across the world is just plunging. And there was a record low fertility rate in 2024 in the US. And people are saying like this is terrible. Like it's in terms of productivity and economic growth, like the big thing is population, right? Those are the two things that matter for economic growth. If population falls off a cliff, that's a really bad thing for the state of the world.
I think that used to be true. We needed more people to do more things. It's no longer true. And how about if this chart was inverted and fertility rate was skyrocketing, wouldn't there be mega concerns about the health of the globe? Like, we're overpopulating the world. There's not enough resources.
That used to be the worry.
What's so wrong with this chart? That
I think this chart just shows we're getting richer. And when you get richer, and like you said, you don't need 7 kids to work the farm for you. But I think the people who are worried about fertility rates falling off a cliff, AI is the answer. It's productivity. That picks up the slack for lack of population.
Yeah, I'm not a fertilitist, but I don't know. This doesn't concern me. Should it?
Is that a thing? All right. Crypto time.
All right. Here's the lead from an article by Greg Zuckerman and Vicky Gawang at the Wall Street Journal. It's the hottest trade of the summer. Companies are raising tens of billions of dollars not to invest in their business or hire employees, but to purchase Bitcoin and more obscure cryptocurrencies. A Japanese hotel operator, a French semiconductor manufacturer, a Florida toy maker, a nail salon chain, an electric bike maker. They're all plowing cash into tokens, helping to send all kinds of digital currencies to record levels. News that a company plans to buy cryptos enough to send the shares flying, spurring others to consider joining the frenzy. Since June 1st, 98 companies have announced plans to raise over $43 billion to buy Bitcoin and other cryptocurrencies. All right, this is the dumb money. I found it. This makes no sense.
that right there sounded like something that you see in the book about this bubble. That's a public anecdote right there.
I mean, this is ridiculous. This is nonsense. Mutual fund giant Capital Group, hedge fund D1 Capital Partners, and investment bank Cantor Fitzgerald are among those backing recent efforts. I just don't understand. Like, I understand the thinking. Like, all right, we're gonna buy $1 of this token, and the premium is gonna be $2 or whatever. All right, but could you imagine, like, raising giant pools of money to do this? Like,
And borrowing to do so,
there's
right?
billions of dollars that are investing in these things. I mean, this is complete nonsense. This is not going to end well. I hate the buckle up buttercup bullshit. I hate like warning people about but like this is garbage.
So I remember Josh wrote a piece when the SPAC boom hit, and he said, "Listen, the thing that ends this is just more SPACs. The
Yeah, it's too much
supply
supply.
overwhelms the demand, and that's the same thing that would happen. You would imagine, right?
Now the thing with crypto that makes it unique is that the supply is fixed, right? And so more money coming in, it could just continue to it could work for a while.
I keep
But like
seeing,
the premium, like the idea that there's going to be a dozen micro strategies, that part I just don't buy. Maybe there could be a few others.
we talked about the volatility piece of crypto last week, and with the understanding that yes, volatility has come down. Like I've seen keep seeing people say, like, listen, now that this is institutionalized, crypto's not going to have the crazy volatility, and I do not believe that for a second. This is still a crazy 24/7 market, and seeing air pockets in this, especially with all the borrowed money in here, I think that you're nuts if you think that the crazy volatility is gone forever.
Yeah.
I don't think so. So this is interesting. I don't know if this person is a crypto soothsayer, but they have hashtag Bitcoin in their Twitter profile. So that means they must be legit. Okay. The Wolf of all streets, Scott Melker. He's got 1 million followers. So he's a Bitcoin. So
That's
he says,
a great handle.
yeah,
The Wolf of Wall Streets.
Bitcoin is amazing, but it's obviously been co-opted to some degree by the very people that it was created as a hedge against.
To some degree.
Yeah. Many of the most ardent early whales have seen their faith shaken and have been selling at these prices. Now, I don't know if I saw people in the comments saying like, prove it. And he said, well, I had conversations. So maybe he's making this up, but is it possible that some of these people are finally going to go, hey, I joined this for like the libertarian, we're fighting against the man, and this isn't it anymore. Now that we have all the ETFs and there's institutional capital, I'm out. Could that actually be the first thing that shakes some of these religious beliefs from these people? Because the religion aspect of it has been the whole thing so far, right? That's been the bull case. Is it possible if Wall Street like sends these people like, fine, I'm out. If you're here, then this is not what I signed up for.
I sort of reject the notion of this conversation because it's so theoretical. Like, is it possible that some people are thinking this one thing? Like, I don't know. Maybe. Sure. Could be.
Well, yeah. Anything about the future is theoretical.
No. But it's just such a ridiculous conversation. Like, this person tweeted something that people are thinking one thing. Like, I don't know. Maybe they are.
I told you his profile says hashtag Bitcoin.
True.
Did you think about that?
I don't know. There does seem to be a lot of supply at 120. There is some selling going on there for the last week. But
my thought is that the Bitcoin people have been able to change their line of thinking through every cycle to something different. And I don't know why this would be any different than that. Like, hey, we got there first, and they're just...
I mean, there's no arguing that where we are today is very different from what the early Bitcoiners wanted Bitcoin to become. I mean, that's a fact.
Yes.
But how do they feel about that? I don't know. Everybody feels differently about things, especially when it comes to like potentially hundreds of millions of their own dollars.
Can you imagine telling them like, listen, the biggest catalyst for the bull market in the mid 2020s is going to be an ETF. It's going to be financial advisors and institutions that come in to buy.
Yeah.
How do you feel about that? They wouldn't have felt great, but who cares? Number go up.
Yeah. All right. New record high. Let's move on. New record high for existing single family home prices in June. That's from Kevin Gordon. Okay. There is. All right. So I've been thinking a lot about this. Lower interest rates are obviously going to unlock supply, right? People are trapped in their house.
And demand.
But way more, but demand never left. That's the thing. Demand is going to
It's just waiting in the shadows, right?
demand is going to so far outstrip supply, I believe, that for every seller there will be 11 buyers. So I don't see home prices coming down. Do you?
Well, they are in certain areas already, but
Nationwide.
I think, yes, I think that the places that it's falling, there are specific reasons and it makes sense. And yeah, and even if home prices did fall nationwide a little bit, then the lower rates immediately reverses it.
So I'll give a housing update on my personal situation next week, but so the boys have to switch elementary schools, which I did when I was in third grade. And Logan, who is going into first grade, said that he doesn't want to. And Robin goes, see, he doesn't want to. We shouldn't do it. I go, Logan, what's 5 plus 1? He said 5. I said, I don't care what he thinks. His vote does not count.
When I was going from 4th to 5th grade, we moved from Grand Rapids to Traverse City, which is like a 2.5 hour difference. My dad took a new job up north and I was devastated. And my parents like, why are we, they said years later, like, why were you so devastated? I'm like, I don't know, because the first week we started school, I immediately forgot about it and moved on and it didn't matter anymore. Right? It's just change for a little bit.
It's scary. Yeah.
Right. And then but then you realize you move on and you're fine. Okay. This is from the Wall Street Journal. So far in 2025, investors who buy homes to flip or rent out have made up about 30% of purchases. That's the highest on record, according to property analytics firm Cotality, which tracks the sales for the past 14 years. So some people get mad about this, but this is not the kind of thing where you can get mad and blame the big private equity places, BlackRock, Blackstone, the usual suspects, because they're just stepping in where individual people don't want to go. And the funny thing is that small investors made up 25% of these, while large investors account for 5%. So they break it down to people who invest in 3 to 9 properties, 9 or 10 to 99, 100 to 999, and 1,000 or more. And the biggest one is always people with 3 to 9 properties. And this is a weird thing. I think I've said before that crypto was the first place where retail was really the big investor. But I guess you could say retail is a big investor in rental units as well. Like it's people who just own a handful of rental properties. They're not like these big mammoth organizations. It's still the smaller ones that are doing it. And the growing one is just 10 to 99. So it's not like these big firms are doing it. And they say that the smaller people can take on more risk because they don't really have to report to pension funds or outside stakeholders. It's just themselves. And they have less competition now because individuals aren't buying.
Yeah.
So like the fact that this is happening, like they're part of the reason activity is still it would be even worse if it weren't for these investors. Even though you got out of that game.
I retired.
Technically, you were a real estate investor. All right, Lance Lambert said we've hit 3 years of mortgage rates at 6.5 to 7.5%. Brief breaks, but that's pretty much been where we've been stuck since 2022. And I've said this before, I never would have believed the housing market would have held up this well with rates this high for this long. Wouldn't you have assumed like there has to be a 10% correction if rates are going to be that high? There has. I think.
Well, the thinking was backwards.
Yeah, right? It was.
It was backwards. It was like, well, no, and maybe it should have been obvious, but I guess that's what hindsight is. That rates is high, we're going to trap people in their houses, and supply was just going to be completely wiped off the market.
What would have happened if rates would have stayed under 5% for the last 3 years? What would have happened? Would it have died off eventually, do you think? Like the fervor of crazy waiting lines for
how many millennials are there waiting to buy a house? Was it is the number 40 million?
Probably. Well, maybe not that high. I think the homeownership rate for millennials is it's probably, I guess it's 55% or so.
I don't know.
Maybe you're right.
Who knows? Who's to say what could have happened? Maybe houses could have gone to zero. Who knows? All right, anything's possible.
All right, this is a cool study someone sent us from constructionphysics.com. They wanted to figure out how many vacation homes there are in the United States overall. And I don't know what kind of property records they looked at, but they say as of 2023, there's 142 million housing units, roughly one home for every 2.4 people in the country. 14.8 of them are vacant. 4.8 of those are vacation or seasonal. So 3.5% of the total. So it's a very, very small amount. Then they look at the place with the most vacation homes, and it's Florida, 800,000, followed by California, New York, and then Michigan in the top 5, which doesn't surprise me because of all the water. Does that number seem high to low to you, that it's like 3.5% of people of houses in this country are vacation homes? It's a tiny amount, obviously.
Sounds exactly right.
Think so?
I don't know. What do you think? Yeah, it sounds about right.
All right, let's talk private markets.
All right. Jason Zweig wrote, Wall Street is promoting a colossal lie. Money managers are in a desperate race to stuff illiquid, so-called private market assets into funds anyone can buy, including your 401k. They say we all can earn high return and low risk with non-traded alternatives like private equity, venture capital, and private real estate. Jason is fighting the good fight, trying to warn investors of potential risks and blind spots, and Lord knows there are many of them with private markets. He's not going to win this one.
Listen, I think the points he makes are valid. On the one hand, the fact that only 5% of shares can be redeemed every quarter or whatever, is it quarter or year?
Quarter.
Every quarter. That makes sense because these are meant to be long-term vehicles. You can't have illiquid vehicles be short-term in nature. But there are going to be investors who don't understand the liquidity profile of these, and they're going to be very angry when they want or need their money and they can't get it out. There's going to be problems with some of these funds, and
for sure.
There's going to be shenanigans with the marks on these things that, like, the marks are not what you think they are, and not what they say they are. So there's going to be issues.
The lack of liquidity, to me, that's like the least of it. If you buy this and you don't understand that there is not the liquidity of the stock market, that is on you. Because there is going to be so much disclosures and disclaimers and things out there. If you buy private illiquid stuff and you get mad that you can't get your money out, that's on you.
Fair.
Like, I think most people will understand that. But I do believe that Jason is 100% right about the way that these firms are marketing these investments, are telling the public why they need to get into them. They're doing it for a very simple reason, because the fees are much higher, because there is no liquidity. They can take these fees to the bank, right? You can get in, you can't leave. So this is very good business for Wall Street.
This is Wall Street fighting back against passive investing.
That's true.
Listen, we had this nirvana of low-cost investing, $0 trades, basically buying index funds for free, and Wall Street said, no. We can't allow this to keep going. There's no way. We need our fees. Come on.
I also think that while there will be a lot of disappointed investors, there will be a lot of returns that are not farmed. There will be risks that people don't know about. All of that is true. Ultimately, I think private managers, this is like a be careful what you wish for, because you know the phrase sunlight is the best disinfectant? A lot of the bullshit that they were allowed to get away with is going to be brought to light by reporters like Jason and others, because there will be horror stories. Investors will get burned. But I think overall, what is inevitably coming, and it is coming, I think will end up at the end of the tunnel being good for the end investor, because there will be more transparency, there will be more education, understanding.
Because there have to be, right?
Fees will come down.
Advisors will push back against the bullshit.
So there's a lot.
What all that leads to is just lower returns than they're being promised, which probably is a good thing. But I have these experiences working with hedge funds back in the day, and we had one hedge fund who closed because their biggest investor left. Like they had a huge foundation or endowment, and the endowment pulled their money, and they said, "All right, we have to shut this fund down because we can't do this anymore." So we're like, "Okay, give us our money back." And then they said, "Well, actually, we have some private investments on the books, and it took like 3 years to get the money."
Yeah.
And I see those kind of things happening where it's like,
no doubt.
So
But I don't want to paint the entire industry with a broad brush that it's all bullshit, because it's not. There are things that you can get in illiquid structures that are different, that are diversifiers, that are not correlated.
Right, they're not all just made up. There wouldn't be that much money in them if this was all like some made up scheme to make Wall Street rich.
like infrastructure, for example. You can't. I'm not saying that you need that, but if you want that, you can get it in an ETF wrapper. And when this stuff comes into ETF wrappers, it's a whole.
And I think that there are
wax,
some investors who understand the liquidity and want to have marks that come once a month or once a quarter and don't see the changing volatility. Even if it's volatility laundering, they're going to want that.
100%. Yeah, who wouldn't want that? And also, people, if you like talk about position size and you think people are like going all in on this stuff.
Yes, that's the thing. It's got to be right sized. And I think that's why places like BlackRock are talking about like 50, 30, 20 portfolios.
Yeah.
Right. All right.
Yeah.
This from Torsten Slok makes people mad, but it doesn't really matter. In 2001, people aged 55 and above owned 50% of all U.S. Household assets. Today, they own 70%.
When you say it doesn't really matter, what do you mean?
Because it's just baby boomers getting older. And guess what? That money is going to be dispersed eventually. Father Time is undefeated. This seems like, oh my gosh, but guess what? We've never had a cohort this big before live this long. So this was bound to happen. It's compounding. And then the baby boomers die off and the money gets dispersed. And guess what? Someday it'll be millennials in this position.
Mm-hmm.
This time solves this one.
Yep.
Okay. So every summer we take a family trip. My parents, for like a Christmas present, bring my whole family, my sister and her husband, my brother and his kids, their whole family. So this is our first year without him, which is kind of tough, but we had fun. So we went in northern Michigan to a resort, and we went to breweries, and the breweries were all packed. We went to a place on the lake, and it's packed, and there's boats everywhere. Do you think travel anecdotes are helpful for understanding the economy, or is that going to be the last thing to go? Because I wonder if like that's not going to be a leading indicator. Like people all of a sudden just stop spending on travel. Like it's one of those things where everywhere we went was just packed with people, and I just wonder if that is not going to be the helpful at all. And that comes later.
No, I know what you're saying, but it's the first thing to go because these are the big ticket items, right?
I think so. I feel like the people who can spend on travel will keep doing it, and it'll seem.
Well, yeah, but yes, of course. So the question is not will it be the first to go, because it will be for people that are impacted by the economy or their industry. You're not going to cancel your Netflix, so you will pull back on the big things. But I think the bigger point is the upper middle class is so enormous that the travel boom is just different than what we're used to.
It is.
So I was at there's one restaurant on the water in my town, and the food is whatever. It's nothing to speak of, but it's a spot on the water. And it's a great vibe, and it was packed. I got there at what time did I get there? 8:00, and it was like a 30-40 minute wait. I'm like, this is unbelievable. I guess the economy's okay.
Eating and drinking on the water gives you at least a 25% premium on the vibes.
So it's hard to like untangle what sort of reflection is this restaurant on the economy, or just people just eating out more, and I don't know.
That's the thing. I just don't know if it's going to be helpful for like using that data to understand. Maybe this is just a big sea change for a lot of people.
The counterpoint, and a lot of this was like foreigners, but we saw a pretty big softening at TSA numbers earlier in the year in the first quarter. Like they did have a pretty dramatic dip.
Then it came right back.
Yeah, it came right back.
So as far as like health stuff goes, I'm a person who hates hacks. I think you have to put the work in. You have to exercise and eat right. That's the health hack. I know cold plunges are big in recent years. So we stayed at this resort, and they had hot tubs, and they also had saunas and cold plunges in between every one of these little townhouse places. And so my kids wanted to do the cold plunge. Like, oh, this will be fun. We'll go in the cold plunge, then we'll go in the sauna. And I did the cold plunge, and I kind of needed it because my kids woke me up, and my brother-in-law still likes to go out and have fun when we all get together. So I went out to the bars. It was walkable. I was safe. Home early, but still, there was some tequila consumed. And let's say I wasn't, at 100% the next day. So I jumped in the cold plunge thinking, okay, this is a hangover cure. And it kind of was. It felt good, but I think that's a form of torture. You can show me all the studies that shows me like how it's better for your joints and circulation. And I think it's just a form of torture. I don't think it's so painful to do. Just not fun at all.
Yeah, I don't think I can handle that. I'm very weak.
Sauna I can get behind. Cold plunge, no way.
Big
all right, one more
guy.
thing.
Wait, can I just say one thing on the health stuff?
Mhm.
So I don't know if you noticed. In fact, I'm guessing you didn't. I'm down 14 pounds. My weight is now hovering around 169.
Okay.
And
Well,
if that
what's
sounds
your
like
secret?
if
What's
it
your
sounds like
hack?
I'm light, I just have no muscle. I'm not. But no, there's no. Well, I'm just not eating carbs, and I've pretty much cut out. Not yeah. I don't eat like I've just been eating clean. That's all. No
You're not
sugar.
intermittent fasting?
Nah, I'm not doing that. I'm just not really eating pizza or pasta.
Okay.
Nothing earth shattering.
Funny how that works.
But here's the rub. I don't look good. Like I asked Rob, it's like, do I look skinny? She's like, your belly's still kind of big. Like it's not. I feel like I look exactly the same.
14 pounds is a lot.
Right? But somehow I don't look better.
I can see it in your face.
Oh, thanks.
Yeah. So one of the things, so we're on a lake, and there's this huge lake in northern Michigan that's it's crystal clear, it's beautiful, called Torch Lake. And we were driving around to go to lunch place. My dad goes, "Man, when I moved up here in the '90s, I could have bought 4 plots of land here for like whatever, 100 grand each. And can you imagine how much they'd be worth right now? Millions." He's like, "Gosh, kicking myself." Will people still be saying stuff like that 30 years from now? Like, I could have bought a plot of land here or a house here 30 years ago, and oh my gosh. But the thing is, you mentioned people just are more attuned to travel and eating out and stuff now. I grew up in northern Michigan. People didn't lean into how beautiful it was back then. It's like sometime in the early 2000s, and maybe even like after the great financial crisis, people finally realized like, oh, these places are beautiful. Maybe we should lean into that and make good stuff for people to do and highlight them. And I don't know if just social media explosion helped that stuff, but is there no more low hanging fruit, I guess is what I'm asking.
Yeah, I would say that there is no low hanging fruit the way there used to be.
I don't think there is either. I think
there's too much money.
And there's too much information.
So $1 million compounded at 2% for 30 years, which is like a reasonable growth rate for real estate, right?
Yeah.
1.8 million. So it's not like in 30 years, people would be like, oh my God, you used to be able to get this for $1 million. You know what I mean? Because that's like the rate of inflation.
Yeah.
So no, I don't think we're going to be looking back and saying that. All right. So I went to see Fantastic Four. It is the biggest opening ever for one of the Fantastic Four movies, which is not saying a lot because the previous ones were absolute
There's been
shit.
so many.
But here's the thing. The rare instance where 2 July movies opened over $100 million. 2022 was the only other year in recent history.
Wait, what's the other one? Superman?
I guess so. Superman. Where's Jurassic? Yeah, Superman, I guess. Movie was certainly watchable. There was some cool CGI stuff. I wonder if Fantastic Four doesn't work because it's just weird. It's like you're in an alternate universe on Earth that is simultaneously in the 60s, but also in like the 2300s. There's like flying cars and futuristic stuff, but
So
it's
like the Jetsons?
But yeah, it's like the Jetsons. And Pedro Pascal as Reed Richards is a dork. Pedro Pascal is not a dork. And the characters felt hollow. Whatever. It was fine. It was watchable.
Okay. Not a very...
But yeah, it was fine. All right, anyway. Somebody emailed us about the movies. We're at the local movie complex yesterday, seeing I Know What You Did Last Summer, 7.43 rating by me. I don't buy that. This movie got horrible reviews. But all right, generous review. Anyway, I witnessed an employee carrying a rather large bag of popcorn to the exit in a DoorDash bag. Was that someone DoorDashing popcorn, I asked? Oh yeah, happens all the time.
Oh my God.
Could you imagine? So
wow.
Popcorn at the movies is, I don't know, $9, $12, depending on the size, whatever, maybe a little bit more.
You're probably paying $25 for popcorn.
$25 popcorn.
Wow. We are so lazy.
I mean, that is unbelievable. Because guess what? Popcorn in your microwave, while not quite as good, gets you 80% of the way there.
Yeah.
And it's unbelievable. Right. I can't imagine DoorDashing popcorn. All right, Ben, continue with the theme of like everything is, they're just really leaning into old titles. Meet the Parents 4 is titled Father-in-Law. I'm in. De Niro, Stiller, Owen Wilson.
Man, I'll watch it, but I won't be happy about it. I have thoughts for Happy Gilmore too in a minute.
Okay. Yeah, I'm in. All right. Want to give a plug for, we're doing our first webinar for Exhibit A. So if you're a financial advisor, you've been hearing us talk about it, you're like, all right, I kind of want to check it out. We're doing one with Taylor Schulte in the second week of August, I believe.
So he's an advisor to show how he's using it, right?
Yeah. And we've got over 100 advisors signed up. So thank you to Taylor for giving us the opportunity.
The charts of the week are great. Yeah. Check it out. ExhibitAforAdvice.com, right? Exhibit, yeah. All right. So last week, Ozzy Osbourne and Hulk Hogan both died, right? And like when people you know die, it feels like whether you know them or not, or they're just celebrities. Here's something that's kind of morbid, but there are so many baby boomers. We just have to get used to this happening all the time. There's like for the next 20 years, like all the time, there's going to be people that you know or heard of in the TV show or the movie or the sporting or whatever that die. And I told this to my wife, listen, this is really morbid, but our parents are in their 70s. My dad is approaching his 80s. In the next 10 years, one of them is probably going to get really sick or die.
Yeah. And
it's a very morbid thought, but like with the number of baby boomers, there's just going to be a lot of people that die in the years ahead.
Ryan Sandberg died yesterday.
Right? It's a morbid thing, but that kind of thing is just going to happen all the time now.
And Michael Madsen died.
Think about how long the Oscars thing is going to be in the years ahead, right?
So I just pulled up Michael Madsen's, this guy ruled. Do you remember that he was in Free Willy? I saw that at my birthday party in third grade.
You make Bill. Up every time you think you saw a movie in grade school, you make it up.
Yeah, there's a 50-50 chance that happened, but I'm pretty sure it did.
No, I know for a fact, my son and I just watched Free Willy a couple weeks ago.
I'm sure that is a ridiculous movie.
Oh, it very, very much.
I know for a fact we saw Secret of the Ooze on my 6th birthday, I think. But Michael Madsen, what a career! Reservoir Dogs, Kill Bill.
I'm gonna have AI go through all of our past shows and see how many times you said you saw a movie on your birthday that you didn't.
Yeah, I'm sure I'm making up some of these.
All right, can we do recommendations?
Go ahead.
All right, so I watched Happy Gilmore 2. Did you watch it?
I saw the first 15 minutes and then I said, I think
that was enough. I think you made the. My wife said the same thing. I think it's one of those movies where your mind was already made up before you watched it. My whole thing with comedies is, would I ever watch this again? And obviously that's a pretty low bar, but no, I wouldn't. It kind of joins the list of sequels to me that never happened. In my mind, they just never happened. Hangover 2 never happened, right? Anchorman 2, nope. Zoolander 2 never happened.
Whoa,
classics.
Hold on. Anchorman 2, I know we've had this conversation before. There are scenes that are laugh out loud funny. I know the movie as a whole doesn't hold a candle to the first one, but there are scenes. I've
tried it like 4 times and I could never finish it. That's how it just... So here's the thing. So I wrote this thing about Adam Sandler in 2014 about how like he's just not... You can't be funny for that long because when you get that rich and famous, like you just can't, and you move into a different... And the thing is, I think for him, like... It was a win, even though the movie was terrible, like objectively a horrible movie, not good at all.
It was the biggest movie of the year on Netflix.
I'm sure there is a million cameos. Like Ben Stiller played his same part, and I thought even that maybe this will be funny, and it wasn't. Like I didn't even crack a smile once. But he got to make a movie with all of his friends. He got to make it with all these professional golfers. He always puts his wife and his daughter in his movies now. For him, he gets to go on vacation and work with all these people, and so for him, it's still a win, even though objectively he's making dog shit movies now.
And you know what? It's Adam Sandler. Everyone loves him. Like I feel like if you're
if you're
mad about Happy Gilmore,
that's the thing. I wasn't mad. Yeah. Like I understand why they did it, and to him it was fun. It's just it never works to remake a classic comedy. The only ones that have worked are Austin Powers. Okay, the second one was good. Third one was okay. The National Lampoon movies,
Naked Gun
33 and a third,
Hot Shots
Part 2. I think American Pie 2 stands up still. I think that one was funny, but it's very few and far between. It almost never works because guess what? I don't want to know what happened with Happy Gilmore. I don't want to know what happened with the Hangover guys after it's done, it's done. All right. We watched Warfare last night. Did you see that one?
In theaters. Did I make that up too?
Probably. I listened to an interview with the guy who wrote and directed it, and it was
Alex Garland.
Yeah, it happened to him, right? And he tried to make it as real life as possible, going off of interviews with the people who were actually there. It's about a combat mission in Iraq, and it was very well done, and it felt very real.
It felt like a documentary. Like it felt like you were watching Call of Duty.
It was a very tough watch, though.
Oh, yeah.
Very tough watch. Yeah, very well done. Very tough. All right, I finished Stick and Day of the Jackal. I would say Stick is like a 6.6, like entertaining, few cheesy moments. But if you like Owen Wilson, you like it. Day of the Jackal got better as it went on. I like that one.
Huh. Okay.
That's a thumbs up from me.
Okay. All right. I think I'm sticking with this audio thing, Ben.
Okay.
I mentioned this last week.
Did you get an Audible?
I did. I miss reading. I love learning, and the way that you learn new things is in books, right? That's the deal. But I just don't have the mental energy. I can't commit to reading books. It's just
Isn't it easier to zone out to an audiobook though than it is when you're actually reading?
sometimes, depending on the book. So there are times where I zone out and I rewind 30 seconds or a minute. So I listened to Leave the Gun, Take the Cannoli, which is about the making of The Godfather. Now, for my audiobooks, like I am always on the go. I'm always either driving or walking, or like I always have AirPods and I'm always listening to something. Chopping vegetables. I know it's random, but whatever it is, like I'm always, right? I have my AirPods in a lot. So I finished that book, and it is all
Is that
about
the one that the TV show is based on?
The Offer. I don't know. I don't think so.
Okay.
But no. I definitely don't think so. It starts with Mario Puzo, who wrote The Godfather. By the way, he wrote that in Merrick, my hometown. Did you know that?
I didn't know that.
He was
The story
living
about him is crazy. Like he just made this all up in his mind. He didn't have any experience or
He never met a gangster.
yeah.
So it was all about his journey, his ups and downs until he made this. It was a lot about the studio, Paramount, which is owned by Gulf and Western, and the story behind like the magnets there.
Yeah. I liked The Offer was good. It was way too long, but it was good.
Coppola, the production, the casting, like all of it was awesome. And so anyway, now, naturally, I crushed that. I'm listening to The Godfather, and I just finished chapter 1, and whoa.
It's the best book I've ever read. It's my favorite. It's my favorite book I've ever read. It was 750 pages or something, and absolutely because it takes parts of Godfather 1 and 2, the movies.
Oh,
It's
okay.
yeah. So there's
Anyway,
parts
chapter 1 I was blown away by. So I know the idea of audiobooks might sound ridiculous. It sounds like cheating. I don't care. I'm an audiobook guy now. Leave me alone.
I'm a big guy who likes to read books about, like I'm reading High Fidelity right now because I rewatched the movie recently. And it seems stupid and like, why would you do that? But I think sometimes you get more out of the movie if you read the source material first. So reading The Godfather made the movies better for me.
Yeah. All right. That'll do it. So thank you for listening. Thank you, Duncan and John and the rest of the production team. Animal Spirits at thecompoundnews.com. We'll see you next time.
Look at that cute little guy back there. Here.